This is a typical residential street in Santa Ana in the heart of Orange County, California. You could call this the epicenter of our nation's financial meltdown, where many homes like this are now in foreclosure. It might be hard to believe, but 3 years ago, this house sold for $585,000. All of it borrowed by a man who probably thought he could afford it. But less than a year later, he defaulted. And now the house is up for sale at auction, if anyone would even be interested in buying it. But why would a lender issue a loan that a borrower might never pay back? Some blame the problem on a good idea gone bad. Beginning in the 1990s, Congress made it easier to get a mortgage.
70% of Americans who own their own homes today, in no small measure, do because of the work that's been done here.
The rules for lending were eased so more people could qualify for mortgages. And with millions more now qualified, the lending business boomed.
I'm with Countrywide, and I got them all approved.
The biggest player of all, Countrywide Financial, run by CEO Angelo Mazzillo. It was Countrywide that loaned Paula Taylor nearly $260,000 to buy a condo, even though she was clearly unqualified. So what was the incentive? Well, first, salesmen were paid commissions for every loan they wrote, and the lending companies collected fees. But there was a much bigger incentive to make as many loans as possible. A pot of gold overflowing with riches, a scheme powered by some of the biggest financial institutions on Wall Street. But it was all destined to fail.
It blew up because it was based on a scam.
Few people know more about the financial crisis than Harvard law professor Elizabeth Warren.
Down at its heart, it was based on selling mortgages to people who simply weren't going to be able to pay them off.
It was all based on a series of lies, beginning with the loan application. On Paula Taylor's application, it said she earned around $90,000 a year, $7,300 a month, even though she says she told them she took home only $1,600 a month. She says she never noticed that inflated income until we pointed it out to her.
So you didn't put down that you made $7,300 a month?
Oh, no. Absolutely not.
Well, if you didn't, who did?
It had to be them in order to finagle the numbers to say that I could afford this property.
Would a reputable lender do such a thing? Deliberately lie?
Throughout the industry, they were called the liar loans.
Karash Parto once ran Countrywide's operations in Alaska. He's speaking out for the first time.
Liar loans.
That is correct.
Officially, they were called stated income loans.
There was no independent verification of salary, savings, investments. And this was official procedure.
Absolutely.
He says they even joked about it.
If you have a pulse, we give you a loan. If you fog the mirror, give you a loan.
He says if borrowers didn't lie, sometimes loan officers did it for them. Federal authorities caught Parto, and he spent a year and a half in prison for processing liar loans on behalf of a real estate speculator. When Countrywide found out, it fired him and others in the Alaska office. But Parto insists the practice of faking loan applications was rampant, and everyone in the business knew it.
So you're saying top company officials knew borrowers were submitting false applications?
It's impossible that they didn't know.
Countrywide executives portrayed Parto as a rogue who violated company standards. But listen to Bob Feinberg, who worked at Countrywide for 12 years.
Rogue?
You buy that?
No, I don't buy the rogue. I think it was infested.
Feinberg says that when he started, Countrywide was ethical and by the book. But then, things just went haywire, pushing loans borrowers couldn't afford, with interest rates that could adjust and go way up.
What's wrong with that marketing?
Because you're going to put them into a loan that's guaranteed to fail.
In Michigan, Linda Johnson, a retired school principal, lived in this house for 26 years. Then when her daughter got into an Ivy League college, she decided to do what millions of homeowners were doing: refinance, taking out a new loan for more money, paying off the old loan, and using the extra cash to pay tuition.
What kind of a mortgage did you think you were getting?
I thought I was getting a fixed mortgage.
But the interest rate wasn't fixed. It was adjustable. Like many borrowers, she acknowledges she didn't go through the loan papers in detail, so she was shocked when her mortgage later jumped to nearly 12%. To keep up with her loan payments, she ended up borrowing money from her pension fund.
I made the payments on time.
At what cost to your retirement plan?
I've taken out everything I can take without a severe penalty. And so...
And how much longer can you hang on?
I can't. I'm tapped.
You're done.
I'm done.
Another homeowner drowning in debt, even though she thought her lender had her best interests at heart.
Let's be real clear about this mortgage crisis. This was not about getting people to own homes.
Elizabeth Warren says mortgage companies were more interested in profits and selling as many loans as possible, especially risky loans to risky borrowers. Why? Because the riskier the loan, the more a borrower had to pay in interest. So sales reps were paid bigger commissions for bringing in those riskier loans.
Mortgage brokers got paid a higher premium for selling every customer a worse product. They actually got a sheet of paper every morning that said, in effect, if you've got somebody who's got this credit score and this much down payment and wants to borrow this much, if you sell them something clean, we'll pay you $500. If you sell them something a little bit dirty, we'll pay you $1,000. If you sell them something really dirty, we'll pay you $4,000. That's how mortgages were being sold in America.
From 2001 through 2007, more than 105 million mortgages were sold, totaling more than $17 trillion. With so much mortgage money available, sellers could practically name their price, so home values kept going up. That means the mortgages also got bigger, and risky or not, lenders were happy because the higher the dollar value on a house, the bigger fees they collected. Which brings us to another lie, the house appraisal.
The appraiser would say, what value are you looking for? Well, we want this value. We want it to come in at 1.3. Oh, okay. And they'd go out, do their appraisal, and it would come in at 1.3.
In that kind of environment, Karash Parto says Countrywide made one bad loan after another.
There are some times it would say if it was my money, I would not lend it.
Take the loan made to Paula Taylor.
Does she seem like a candidate to buy a condominium valued at $260,000?
No.
There've got to be thousands of loans just like that.
More than thousands and thousands, hundreds of thousands.
How do you relate what went on at Countrywide to the financial crisis the United States of America is in today?
It's the match that lit the fuse. Me and my peers, we knew this would happen. Not to this extent.
At the end of the day, is this greed? Is it arrogance? Is it corruption?
Greed. It's always greed.